Hey guys, welcome back. In today's video, we are talking about AMC approval, the Citadel lawsuit, the margin calls that are happening, and many more in this video. First, you're taking a look at this. The Fed cuts rates again, saving AMC even more money, mostly will begin impacting Q1 next year. And so we've talked about this, essentially is understanding the fact that AMC debt is going to decrease, and we know this through various different forms, whether it's restructuring, whether it's just paying off bulks, or the fact that we're seeing the interest payment decrease, which allows AMC to have a better cash flow. And so when we talk about the fundamentals of AMC, you can see whether it's right now, whether it's in the future, we are all doing very, very well. AMC has been saying this for a very long time. We talked about this at the very start of the year in terms of how they are trying to improve, how they are going to improve, and we've seen them deliver on the things that they've said. But on top of that, you can see there are some things that, whilst they cannot impact, it is still positively affecting AMC, aka the Fed cut rates, because that's something obviously AMC can't affect. But by having that, it is putting AMC in a better position. We are able to decrease our payment. And we've talked about this a lot of the times. When AMC has more cash, they are able to do more. There are different forms of things that they can do with the cash that they have on hand, whether it's buying back shares, whether it's making more investments, or whether it's reinvesting into the current infrastructure. There are so many things that they can do. And so by understanding this, we've realized that going into whether it's the Q4 results that we're going to see, whether it's going to Q1 of next year, AMC's fundamentals are only going to get even better. If you want to take a look at the box office, and this is just for Tuesday, but of course you can look at it for this whole week, for every single day. I wanted to show you this just because I want to take a random day, and you can see how well movies are doing. You can see the consistency that comes into this, but also we know with the amount of hit movies that have been released recently, one after another, whether it's Wicked for Good, whether it's Zootopia, whether it's Avatar that's going to be released, we are seeing so many movies. This is why we said for the fundamentals, for the earnings of Q4, we are going to be looking at very good results because we've seen so many movies. AMC has improved themselves in so many different ways. We're not just tied onto the box office. Yes, that's the biggest thing that will impact AMC. Let's not, forget that. But there are so many ways that they're improving that's putting them into these better positions. And so by just understanding this, you can see how pairing up with the box office, we are going to be looking at very good results. Now, in terms of the shares approval, you can see shareholders have approved the increase in shares. And so when responding to the shareholder comment, Adam said, "Might I add, we have a prosperous new year." And so this is already his take on what we're going to be seeing for this Q4, what we're going to be seeing for the rest of next year. We've already talked about how AMC is far from bankruptcy. This is something I don't want to keep on repeating because by now we should already see this. Our main problem, our main focus with AMC right now is just how big can we get? How are we able to make the investments that puts us in the most optimal position that attracts everyone? That's the question that we are obviously focusing on. And we know how AMC is doing this, whether it's investing to premium screens, whether it's having, all of these other investments they've made. These is how they're doing it. Now, with this increase in shares, remember, there is a big difference between the authorization and the issuance of shares. And so you have to understand is that if they need to raise cash, they will issue shares. By having that authorization, it's showing how many new shares that they can issue. And one of the biggest things that we talked about is by having cash right now will put them in a very good positions. A thing that we'll talk about later on is a $1 billion investment made by GME, and we talked about how that is going to put them in a good position. But by knowing that, by understanding this, we talked about and understand that AMC, when they have more cash, they are able to do more. If they are able to put themselves in a position where they have constant profit coming in, we talked about this, the potential share buyback, the potential dividends, these are all very, very possible because this is something that they've shown them to do in the past before. And so this is why we want them to improve their fundamentals. And amidst all of this, you have to realize that shorts are panicking because one of the biggest things that they've always tried to avoid is AMC being in a healthy position. They don't want AMC to grow. We should know this by now. And so one of the biggest things that they do is that they try and prevent AMC from going up in price. Now, there's multiple reasons why they prevent the price. Firstly, because they don't want their short positions to be billions of dollars in the red, which we already know with the synthetics is that they very likely are. But the biggest thing is that they are afraid of AMC raising cash. Now, when we talk about raising cash, I think one of the biggest regrets that I see apes talk about is when AMC reached a very high and they asked for the authorization, shareholders obviously didn't approve, and it failed for AMC to raise a cash at that price point. And the shorts realized that as well. The shorts saw that, and so now every time they realize that AMC has the ability to get a large sum of cash, they want to prevent the price, because by pushing the price down, you can understand this by now, you're not able to raise as much cash as you were at 3, 4, 5 or even higher dollars. And so that's what we're seeing there. You can see 74%, and this is for December 9th. And if we take a look at this, 73% for December 8th. And so if you want to talk about constant dark pools, if you want to talk about constant suppression, this is what's happening. And so when we take a look at the fact that AMC right now is down 2.26%, people are going to blame it on the share dilution. But we have to realize, prior to this, when AMC was showing good earnings, when there was no price dilution, when we had all of these things going on, AMC was still going down. One thing that has been consistent has been the fact that the dark pool is at an extremely high percentage. And then people would say is that all these other stocks experience dark pool as well, which again is true. But take a comparison. We've always said this. Take a comparison between the dark pool usage for AMC and Cinemark, and then take a look at the comparison of AMC and any other companies, right? The first is because we're comparing with our competitors. The second is just comparing with the mass market. And from there, we realize is that AMC faces the most manipulation. And so this is why we've said is the fact that if people are blaming the price of AMC going down on dilution, that is not the case, because the only thing that has been constant has been dark pool when we see AMC go down. And that's the main reason for how they manipulate AMC. You can even see 900K already borrowed against a $2.25 stock that sees 73% of all trades being directly routed to dark pools, with a stable moving average of over 70% for over 90 days now. So in the past, we saw AMC around 63, 65, and sometimes 70%. Now our average is over 70%. So that really takes it and highlights just how big it is, just how much suppression is truly going on for AMC. And we have to realize this is that if there isn't anything going on with AMC, if AMC doesn't pose the threat to bring down all of these short sellers, to bring all of these institutions to bankruptcy, there wouldn't be constant dark pool. Why is AMC the only stock, along with GME of course, and maybe some others, to only see, the high amount of dark pool usage? And typically what you will tend to find is that the stocks that experiences a high amount of dark pool usage are all stocks that's got to do and affiliated with heavy naked short selling to exploit and bring down the price, even though there is no fundamentals backing it. Now, when you take a look at the GME earnings, you can see how GME is also doing very well right now. Report shows a profitable and lean business. Net income was 77.1 million. EPS beat by 20%. The 20% revenue miss is concerning. There's no way to sugarcoat it. However, I would assume this is from more store closures. Now, let's talk about this. And once again, we need to be as honest as possible. And we've always said this. Firstly, let's take a look at the comparison between AMC and GME. Now, AMC has a extremely good market infrastructure. Their business is done well. They have a very good system going on. Whereas on the other hand, for GME, they're yet to figure out how to have an efficient business infrastructure. That's the difference between AMC and GME. One has a very good business infrastructure, one doesn't. However, GME has a large amount of cash, which they've gained from the selling of shares as well. And because of that, that's able to put them in a very good position. And so this is why we've said, if AMC were to also have the same amount of cash as GME, that would make them unstoppable, because not only are they able to make investments with the billions of dollars, but they also have a good working infrastructure of business. And so you can see how the two combined will put them in a good position. GME is an example of this. And this is why we've said AMC raising cash is very good. And right now, GME has a free cash flow of 409.9 million. Now, this is obviously a big change from how much they had beforehand, but they've made very big investments. You can see GME made an investment, or rather a purchase of 1.05 billion, which many suspect to obviously be T-bills, and so that's a steady stream of income. And this is why we've said if the AMC were able to be put in the same position as well, you can only imagine how well they will do. And you can only imagine why shorts are trying to suppress AMC. They realize if AMC is able to combine itself with the same ability GameStop has, they will never be able to stop AMC. That's why they constantly suppress AMC to limit how much cash they can borrow. And then you can even see here, improved its gross and operating margins, expanded the cash flow, and had double-digit US sales growth. And so for GME, they are in also a good position. They obviously have areas to work on. The areas they have to work on right now is what AMC has been working on for the past few years. And so AMC is obviously ahead on that. But because they have these investments made, because they have a very healthy cash still, they are able to put themselves in a good position, despite the fact they don't have that business infrastructure like AMC. Now, here's another big thing. Paramount could lift Warner bid to $35 a share to upend Netflix. So this fight for Warner Brothers is still ongoing. And this should just highlight to you the importance of movies right now. People saying movies are going to die. Yet these firms are willing to pay, so much money to buy these firms. And Netflix is still trying to obviously hold on to the fight. And big reason for this is because of how well the box office is doing. And two things for this. Firstly, movies still important, so box office is still going to grow. Secondly, film distribution is very important as well. And that's why we could see why AMC, if they were able to focus and also expand on the film distribution, that would put them in a very good position, and we expect them to obviously grow insanely from that. And you can even see here, this is a post we've seen previously. Streaming apocalypse, how Netflix could kill AMC and movie theaters forever. Now, the funny thing about this is you can see how they mention AMC, and then the rest is just movie theaters. Emphasis on AMC because they want to bring the negatives. And we talked about how these articles are used as a way of sentiment to fluctuate, to kind of inflict these algorithms to make them do short trades on AMC. And this is what we're looking at. But firstly, despite the fact they're saying this, yet Netflix still want to collaborate with AMC. Yet Netflix still want to buy film distribution. You should obviously understand what the actual truth is. Then we have Genius Group versus Citadel Securities. They have officially served the lawsuit papers on Citadel and Virtue, which now means both firms are now required to respond to the case. We talked about this. This is going to be a big thing. This is going to take a very long time. These lawsuits don't just take a few days. They're going to take months, even years. But what we can look at and what we can hope for is for the regulations to really realize this problem and for something to come to hand. Now, I am not a lawyer, so I'm not exactly professional in this. If you have any idea how roughly this will go, how short-term things will happen as well, feel free to comment down below. But then you can see Genius Group buys back 1 million shares. So I really think that they're trying to apply pressure on this. I really think that despite the fact nothing of yet has happened to this lawsuit, it's already put them in a good position. And this is what I hope to see, because if we are able to see them really have a positive impact, we could see AMC and GME follow along and repeat the same thing as well. Now, here's the big thing that's going on in the market right now, is what everyone should be focusing on, which is the margin debt apocalypse. For the 6th consecutive month, Finra member margin debt has shattered records, now sitting at 1.184 trillion as of October. So that's a big thing. The margin debt has gone, to the sky right now. And this is something that barely people are calling it out. Firstly, we have to realize that the option market always moves first. Right now, it's signaling someone is trapped and scrambling for upside hedges. So this was prior. This was around the 10th of December. Now, there's a reason why I'm talking about this, because firstly, we are seeing short sellers facing catastrophic margin calls. Mark-to-market losses go from millions to billions because of the fact we're seeing silver going to $64 for the first time in history. So you can understand what we said when we said that there are always signs, and we're seeing people already getting margin called. Then we're seeing how 4 headlines it took mainstream media long enough to get to. But here we are, the warnings are coming fast and furious now. We're going to talk about why 2026 could bring a market correction that Wall Street fears. So we talked about margin debt, we talked about the short squeeze, and now we're talking about how a massive thing could happen in 2026 that could bring Wall Street down, or at least, that could make them panic. And these are all just highlighting to the short squeeze, to the market crash, to the rise of AMC and GME right now. If you take a look at the reverse repo, $5 billion for Wednesday. I only expect it to go even, or rather be around the same, but it's showing how there is a lack of liquidity. And with everything we've said, the Fed just removed a $500 billion daily cap limit for the standing repo facility. So many things are indicating to lack of liquidity. And the fact we are seeing, firstly, the short sellers getting liquidated. And then going into 2026, we're going to be seeing the longs getting liquidated. You can see how both sides are not winning right now. The only ones who are going to win are the investors who have invested for the longest time, who have accumulated their positions, who have been in the market for long and not chasing the top, nor are they, trying to short right now as well in terms of these high volatility instruments. And so that's why we're going to be seeing the squeeze. As always, none of this is financial advice. So do take us as a grain of salt. Make sure you do your own due diligence and research, and I'll catch you guys next time.